What's up, everyone? In the previous video, we just saw how to use the kill zones and how we see the London manipulation and possibly New York pullback or New York reversal. Now, in this video, I just wanted to show you how it is basically used together with the Asian range, which is pretty obvious as London is right after the Asian session. But I wanted to show you, since your eyes can actually just start to get trained and used to seeing these things, and you can get used to using the Asian range together. Now, later we will see how to use the Asian range projections for your trades, and later in the course you will see how to use all together. But for now, I just wanted to show you. So Asian range, and as we mentioned earlier, London manipulation, New York retest for continuation. Same thing here. Asian range manipulated and taken the liquidity of the Asian range with the London manipulation. Same thing here. Asian range, London manipulation to the upside. We come back again during New York. Actually, here we come back the first time, drop, come back second time, continue. Here, perfect, even better. We manipulate by 1 pip, so we just go above it, grab liquidity of the Asian range, continue, okay? In this example, instead, nothing happens, and this is why it's not 100%. Asian range and then just drop, okay? New York pullback for continuation. Asian range, London manipulation of the range to the downside, as you can see. Continuation, New York pullback, continuation. Asian range, well, in this case, it just went crazy, so this is not really, we cannot apply this. Maybe there were news or something. Here, Asian range, London breakout, retest, and continuation. Now, why did this happen? And this is different from what we saw usually, which is usually London manipulation for a reversal, which we usually continue. Now, why is this different? Because if you refer to the first video where I talk about the Asian range, this is one possibility. It's not always manipulation to continue. Sometimes it's just breakout, retest of the range to continue, okay? It's not always that we manipulate in one direction to reverse, okay? This is the second possibility. And of course, this needs to be paired and used together with the direction of the market and with the trend. And if you do this, you can clearly see that we are in a downtrend. In this case, in London, we have this movement, and instead of thinking that this right here could be the manipulation to then reverse to the upside, you actually understand that this is the breakout. We fail the previous low, we fail the previous demand for a retracement to supply to then continue to the downside. Now, why and how do you understand this? For the direction of the market. Direction of the market is together with market structure. So let's say we have Asian range, London starts. Instead of seeing a manipulation to the upside, which could have been great, maybe to this supply to then continue, we don't see that, and we just see a rally to the downside. We will not interpret this as a manipulation, but we will interpret this as just a move to the downside, breaking structure, breaking the previous demand levels for a retracement, and we're looking to enter at supply. Very important, okay? Big difference. Here, same thing. Asian range, London, we failed the previous level. Is this a manipulation or a break structure? It's a break for a retest and for a continuation. Now, why? Where's the direction? Lower lows, lower highs, lower lows, lower highs. We are in a downtrend, okay? Here, ranging, just going sideways. You saw this example earlier. It's not really the best where you want to be involved. Here, same thing. Asian range, London, we don't manipulate to the upside, which could have been a very good possibility, which I would have liked to see, because that would have been perfect, tapping into supply. This is what we usually want to look for, continuing. But we don't manipulate and we just go down. Break structure. So what do we look for? And this is the overall 1 hour supply right here. Here we build the liquidity. Of course, this could be one entry and then we just keep it open, or later, if you don't get involved right away, we build the liquidity, manipulate above it, and continue to the downside. Here, Asian range, London, we just go to the downside. Is this a manipulation or just a takeoff direction? Here we're breaking everything to the downside. Therefore, we look for supply. Is this at premium? Yes, it is a premium. Perfect. Okay. Here, Asian range. During London, we manipulate a little bit to the upside, and then we drop. New York, we retest. We actually take. This doesn't usually happen many times, but of course it could. We take the liquidity of London and then we drop. And this could be honestly a possible stop loss, since I would trade the New York pullback and I would expect this high to be protected. I wouldn't expect it to be run. Okay, but in this case, this happened. Previous one. Okay, we are in an uptrend. All right. Asian range, London manipulation, push to the upside. Break a structure, we get involved along the way. Okay, so you're starting to understand and get your eyes trained. As I said already, please put these two indicators on your chart. These are not real indicators to actually trade. These just help you see during which time there was the Asian range, during which time we are in London session or in New York session. And keep in mind that you will not use these concepts on JPY pairs, at least for my preference. If you backtest it and you understand something by looking at charts for JPY pairs, then I'm happy for you. But what I like to see using these concepts with the kilo zones and the Asian range is mostly for Euro USD, AUD USD, GBP USD, GBP AUD, GBP CHF, Euro CAD, GBP CAD, and Euro AUD. And if you want USD CAD, USD CAD, yeah, maybe NZD USD too, but I would prefer USD CAD. So get these indicators in your chart, start backtesting, start getting your eyes trained. Here we see another example of London. Is this one that we saw already? I don't know, but since we're here again, I'll just mark it out. London manipulation for a push to the downside, and then New York reversal. But if you catch this trade already, you can be down for the day. Stop loss just above this, or maybe above the high, or maybe you have lower time frames confirmation. You can catch a 1 to 3, or more aggressive 1 to 5, or if you go to the 1 minute time frame, you can catch even more. But we will see the entry types later. You will understand what's going on. I won't show you the other pairs because it is pretty similar in all of them. Maybe GBP AUD is a little bit crazier because GBP can move a little bit more, but still same concepts apply. Now, what happens when you see something like this? This needs to be talked about. So as you can see, the Asian range is usually just a range like this one. What happens when you see something like this, which is huge? Let's see how many pips it is. 60 pips Asian range. You don't want to even look for the same concepts if this happens. So if you get on your chart on this day, I don't know, 22nd of November, and you see something like this, if you will see something like this in the future, don't think about these concepts that I'm teaching you in this video, because these cannot be applied when the Asian range just trends and goes crazy like this during night. So you want to see an Asian range more like this. This is already a little bit more crazy, a little bit more bigger, so not really usable for what I like. But something like this is perfect. Something like this can be already a little bit big, as you can see. Here, perfect Asian range, London break, retest, London break, retest, continuation, okay? This needs to be used with the direction of the market, with supply and demand zones, with liquidity, and so on and so on, okay? Here, acceptable, for example, here, no, too big, okay? Too big, 80 pips. huge. Okay, so look for these things, understand how every pair is different. I can tell you right away that GBP pairs move more than other pairs usually, but just look for the shape of the Asian range. So this is fine, this is perfect, this one is perfect, London manipulation for a reversal, perfect. Then what do we have? Here becomes a little bit trending, as you can see. Here already a little bit bigger, but not too bad. Here perfect. Just showing you what we like to see. Here is not bad, but it's a little bit bigger, but it's not bad, of course, you can use it. All of these, acceptable, acceptable. Then here, acceptable, London manipulation to continue. You see these things almost every single day. Good, Asian range, London manipulation to the upside, 1 pip above the Asian range, and then we continue to the downside. And we were in a downtrend, just to make it clear. So yeah, as I said, always keep in mind that these concepts need to be used with everything else that you are learning in this course. You cannot just get on the chart, put your Asian range, put your session indicator, and then you're like, okay, we are in an uptrend. So I don't know, we are, for example, in a downtrend. So if I see manipulation during London, I will just enter sells. Asian range, manipulation during London to the upside, maybe I will just enter sells right away. No, that's not what we do. You want to look for liquidity. Maybe we have many, I'm just doing examples, it's not the case here. Maybe we have equal highs, maybe we have, maybe we're not at discount, maybe we're not at premium, maybe you are just selling, and maybe we're not even at a supply area or demand area. So you need to use these things first. So liquidity, market structure, supply and demand areas, understanding if supply or demand is in control, and then you use this for a better understanding and for confluence with your trades, basically. Thank you for watching. I'll see you on the next video.